Hi, Justin Love from Vantage One Realty here. So, you now have a comparative market analysis, or CMA for short. What is a CMA? What we do is we look at what is on the market and what is sold, and we look at what your home's specifics and criteria are, and we try our best as possible to narrow down the homes to find, to compare apples to apples, oranges to oranges, and to come up with a value range for your property. So, how do I specifically do it? I'm glad you asked. So, what I used to do, is I would look at everything that sold that was as close as possible to your home, find the price per square foot of your home, and there is, you will notice on the third or fourth page that has the table of contents style of all the listings, they mark out the price per square foot. And then I would take that average price per square foot of what's sold, and I'll come back to why in a second, and then I would multiply your square footage of your home total up and down, but by the price per square foot, come up with a value, and then I used to wonder why I got thrown out homes pretty quick. This was early in my career, because what would happen is the sellers would inevitably say, well, you don't understand, Mr. Realtor, that house down the street only has a one-car garage, I have a double-car garage, therefore I'm worth more than my neighbor's house, etc., etc. So I learned from that experience, and I went and got further training, and what I'd found out is that's a starting point, that's the math side of things, but you really do have to go into the qualitative side of things. Now, going back to why do I use solds, why are those the most important? Because those are people that have put their home on the market and actually sold. They've gotten the result that you're looking for. Makes sense, right? If you're looking at people that are on the market, that is pie in the sky fantasy until they've sold. But a lot of times, if you've seen a property that's been up on the market for 90 days, I would argue that they have the wrong price. Don't be confused. People are not dumb. The market is a scary judge of value. If you have a property that's been sitting up for 120 something days, it's not that people just don't understand the property, it's simply because the seller's offer is not right for the market. The offer is the home, the area, and the price all combined. If any one of those criteria is out of whack, the sale's not going to happen, but people see the price first. So I look at, as close as possible, narrow the square foot range down between plus or minus 200 square feet. I try to keep the size of the property as close as possible. Acreages are a bit of a different story. Those can vary widely. And then I go in and look and see what is sold this year. And after I've narrowed down for that, then I look at the photos of everything that's sold, compare it to what I saw when I saw your home, and try to find homes that are as close as possible as a fit, and try to narrow down that value range. I want to see a home that is not as good as yours, so I can clearly say, hey, your home's better than this one. So I know that here is the ceiling, or here's the floor. Then I want to find the ceiling. I want to find a home that's clearly better than yours, and then I want to find something as close as possible to in the middle. We're trying to find that sweet spot. Again, homes range in value and style and quality greatly, as they also do in neighborhood. So it's not always possible to do apples and apples and oranges to oranges. Sometimes you have to meet halfway in the middle and use our best guess. Yes, it's not an exact science, but this is as close as possible. That's why I try to narrow it down for a range of value, hopefully within $10,000. Why? Because your value is going to change on any given day, and depending upon the buyer that steps through your home. And then it's whatever you guys negotiate out in the end. So value is not a straight line. It is a range, and it's constantly shifting every day, every week, every month. So that's the brief explanation of market analysis. So you're going to see in this report here, you're going to see a high, a low, and a middle. Or it could be low, high, middle. You'll see in the email there. And that's how I do the report. That's how, as much as possible, I narrow values down, and quite successfully, I might add. If for some reason your home is sitting on the market, it's been more than 30 days, it's either a very quiet market or we're simply off on your value range. Again, it's not an exact science here. The next part, the real art and science part, is when your home is on the market, what reaction do we have? So if we have people coming in and seeing the property all day long, seeing your home, but they're not writing an offer, it means we're close on value. We're very, very close, but we're a little off on the value proposition, on our offer to the buyer. So if we tweak that price just a little bit, usually within 5%, people will start writing offers. But if you've been up for 30, 60, 90 days and not a single soul has walked through the door, unfortunately, we were off on our initial calculations, or the market's just shifted greater than we anticipated, then you're about 10% off. Again, you close that gap, you change that price, buyers have a scary sense of value. They will come and they will write an offer. So that's the brief explanation. Any questions, absolutely give me a shout. The report is in your email there. All right, thanks. Bye for now.